The Indian financial market is currently seeing a surge in corporate valuations and capital raising. For the everyday retail investor, navigating this environment usually involves mega IPOs, where early backers and founders cash out their existing shares. Then came the draft red herring prospectus for Jio platforms, targeting a massive 35,000 crore, roughly $4.5 billion. This chart shows how the offering is structured. There is a 0% offer for sale and 100% fresh issue. Every rupee raised is routed directly into the company's central treasury. No founders or early investors are selling a single share. Why would a company that already dominates Indian telecom urgently need a 35,000 crore cash injection right now? This capital structure signals the assembly of a massive war chest for an entirely different kind of technological expansion. Global banks are pitching Jio platforms at a valuation range between $133 and $182 billion, a high premium for a standard telecom provider. Market logic prices this as a high multiple ecosystem of deep tech and fintech services. To understand that valuation, we have to track the 35,000 crore rupees. The first major allocation is highly specific. 27,500 rupees is earmarked immediately for debt repayment. Clearing this balance sheet removes heavy interest burdens and makes the company financially agile for upcoming capital expenditures. Wiping that debt clears the runway. The real focus is what Reliance intends to build with the billions left over. At the 2026 Reliance Annual General Meeting, the company's focus officially shifted from 4G data infrastructure to AI infrastructure. The physical anchor of this shift is the construction of a massive 120-megawatt AI data center infrastructure in Kutch, slated for completion by the end of 2026. Inside these centers, Reliance is deploying advanced NVIDIA GB300 GPUs, creating domestic compute power equivalent to more than 75,000 H100 GPUs. This massive back-end capacity is designed to power new consumer hardware, including the cloud-based Jio PC and AI-enabled Jio Frames smart glasses. On the software layer, they are funding proprietary platforms like Jio Bharat IQ and Jio Health IQ, which are built natively to operate across 22 distinct Indian languages. The strategic objective is to crash the cost of AI access for 1.4 billion Indians, mirroring how they drove down 4G data prices in 2016. The fresh IPO capital is dedicated to constructing a closed-loop digital ecosystem that competitors will find nearly impossible to replicate. Jio has transitioned from laying the pipeline of the internet to owning the data, media, and commerce that flows through it. The ecosystem lock-in is already vast, with 451 million monthly active users on Jio Hotstar and a 34.7% viewership share in the Indian TV market. This chart shows the reality for retail investors on listing day. Current filings indicate a planned public float between 2.5 and 2.9%. That tiny slice barely clears regulatory thresholds. When institutional demand meets retail limits, the result is extreme supply constraints and high volatility. The regulatory environment is also under scrutiny. SEBI has sought further clarifications on the draft prospectus, keeping the final timeline and pricing mechanics under review. Given the constrained float and the high initial valuation, this IPO is not structured to be a simple play for quick listing gains. The retail investor is deciding whether or not to hold a stake in the underlying digital infrastructure of India for the next decade.